Ethereum has just triggered a serious warning signal called the death cross. This bearish signal occurs when the short-term moving average crosses the long-term moving average from above. This indicates increased selling pressure. Many traders consider this signal a sign of a deeper correction or the beginning of a bear market. Looking at the past, after the death cross in 2018, there was a 90% crash, and in 2022, a 72% decline. This raises the question: does this mean Ethereum will soon collapse and enter a new bear market like before? The first ever Ethereum death cross happened in November 2016. After that, there was a 36% drop with no rebounds or recovery rallies. However, this drop became the bottom before an incredible growth of 20,300% the following year. Of course, one could say that in those days, Ethereum was just at the beginning of its journey and was much more volatile. Fast forward to the next death cross, in April 2018, we see a completely different picture. Ethereum first rose by 120%, then reversed and fell by more than 90%, marking its first bear market. And the same situation repeated at the beginning of the next bear market in January 2022. After the death cross, Ethereum showed a dead cat bounce of 47%. After that, the growth was completely reversed, and the price fell by 72%. There were two different bear markets, but with the same outcome. In September 2019, Ethereum's death cross developed in two stages. First, a rise of 32%, then a fall of 45%, wiping out all profits. Based on history, one might assume there will soon be a short-term rise, followed by a major drop. However, this is not necessarily the case. Despite these examples, Ethereum's death cross did not always lead to disasters. In April 2020, during the pandemic flash crash, everything was different. Instead of a sharp rise and sudden fall, Ethereum dropped only 5% and then increased by 2,900% over the next 2 years. Those who bet against Ethereum back then lost a lot of money. Today, the situation seems completely different, as the government was printing trillions of dollars to stimulate the economy at that time. This massive influx of liquidity was the reason for the subsequent strong growth of the cryptocurrency after the crisis. Risk assets like Ethereum can surge sharply. This is indeed true. But there was a death cross in September 2023 during the bull market. After this signal, Ethereum remained in volatile consolidation for almost 2 months. During this time, the price fell by no more than 7%, reminiscent of April 2020. In the end, the selling pressure was completely absorbed, and Ethereum rose by 170% in just 150 days. It was a strong and confident market reaction. But this is not only September 2023. A similar event occurred in August 2024, when the market panicked over a possible recession. At that time, Ethereum experienced a sharp decline, with the 50-day moving average falling below the 200-day moving average. Instead of a sharp rise followed by a drop, the price remained in a narrow consolidation for 3 months. During this period, the price dropped by less than 15%. This consolidation led to an 85% increase when recession fears began to subside. In Ethereum's history, there have been only 7 death crosses: November 2016, April 2018, September 2019, April 2020, January 2022, September 2023, and August 2024. Out of the last 6 death crosses, 3 times there was a significant price recovery, indicating the importance of these signals for market analysis. In April 2018, September 2019, and January 2022, Ethereum showed a sharp short-term increase ranging from 30 to 120%. After that, there was a crash ranging from 45 to 90%. But in April 2020, September 2023, and August 2024, the decline did not exceed 15%. During these periods, consolidation occurred before a significant rise. The only exception was November 2016, when the price fell another 36%. However, at that time, Ethereum was at a very early stage of development. The question is, which of these scenarios are we in today? The Ethereum death cross signal gives mixed signals. Therefore, the ability to respond quickly is more important than ever. In our new digital asset trading service, we share all our crypto trades. The team consists of 4 experienced traders who reveal every move they make. For example, Sherlock showed a total profit of 392% in January, with a 90% success rate, and Pika achieved a 100% win rate in 13 trades, delivering a total return of 212% over the same period. Our service is sponsored by our crypto partners, Bitunix and Bybit. In our opinion, the best platforms for cryptocurrency trading. These platforms are suitable for both beginners and experienced traders who want to trade digital assets successfully. To access our service, simply choose one of our partners and start trading on their platform. You will immediately gain access to all our deals. To understand which death cross scenario is more likely today, you need to move away from purely technical signals and look at what is happening inside the Ethereum network. This chart shows the number of transactions on the Ethereum network. When the line rises, it indicates increased network activity and growing demand for Ethereum. If the line falls, it signals a decrease in network usage and a reduction in demand for Ethereum. If you add red dots to the episodes when Ethereum experienced a death cross, a clear pattern emerges. In 3 cases of the death cross that led to short-term rallies, followed by sharp declines, network activity was already decreasing before the cross. These are April 2018, September 2019, and January 2022. Even after the death cross, activity continued to decline, confirming weak demand for Ethereum. But in 3 cases of the death cross, when Ethereum consolidated and grew, network activity increased after the event. These are April 2020, September 2023, and August 2024. The signal is important. After the first death cross in November 2016, transactions sharply increased, accompanied by a strong rise in the Ethereum market. Today, network activity remains stable despite the recent drop in Ethereum, which does not confirm a bearish trend. This gives hope for recovery. We believe that Ethereum is more likely to follow the path of previous death crosses, which led to consolidation and further asset price growth. However, traders need to stay open to all possible developments and closely monitor changes in transaction activity. If transaction activity begins to sharply decline in the coming weeks, it will be a negative signal and push us toward a bearish outlook for Ethereum. So far, there is no such decline, and the situation remains uncertain, but with a clear tendency towards cautious optimism among analysts. Despite media claims that Ethereum's death cross signals the end of the bull market, the data shows a different picture full of contrasts. In two cases, when major bear markets occurred, Ethereum still demonstrated strong growth and rallies before the decline. Therefore, until clear signs of a bear market appear in Ethereum network activity, we maintain cautious optimism and monitor developments.